everybody. Is everybody awake and happy today? Good. Nobody stayed out too late last night? Okay. Well, welcome to the opening session for the Southeast Recycling Conference. My name, like Jean said, is Nancy Womack, and I happily know some of you in here. This is going to be a fun panel. The first speaker we have, wait, let me back up. We renamed this session last night. So this is the recycling data dump. So everything that you've wanted to know about recycling in different areas, that's what you're going to hear. I'll introduce each one of our speakers before they present, and like Jean said, you've been able to read their bios, but Michael Hoffman is our first presenter, and he is, let me tell you about Michael Hoffman. This is what you're going to remember. He's a former polo player. Now he does dressage. And what was the award you just won? Big Hunter.
Well, 20 years ago, I won the Maryland Hunt Cup, which is sort of the equivalent of the English Grand National.
So he's a really cool guy. He likes to golf. He likes to read. He's got a lot of activities that he does when he's not spending his time analyzing data. So he's with Stifel. So come on up, Michael. Tell us. Teach us.
Good morning, everybody, and I do apologize that I held this up. It's my fault. I was having a really good substantive conversation with Jim Keefe. So I'm going to do a bunch of things. I want to set the stage about what I think is happening in the economy. I want to talk about the state of garbage. We're going to then dive into what I think is happening within the recycling cycle, and I thought it would be worth asking the question, do presidential elections matter or not relative to what we're doing? So the state of the economy, the outlook on GDP, I would tell you, be cautious about what the prognosticators are saying. They always get it wrong. They started 2023 thinking that we were going to have less than 1% growth in the economy. We ended in December at 3.3. The American consumer is extraordinarily resilient. The Michigan Consumer Survey, which is the data I would tell you to focus on, suggests we're still buying. Now, we've pulled back some, but on a relative basis, we're still buying. So the forecast for this year at 1.5%, that's the consensus. I think it's too low. I think we're going to be proven that the number's somewhere between 2 and 3, and if you're thinking about your business, you know, you're acting cautious at 1.5, but be prepared that it might be stronger. CPI, similar issue. Here's the important statement. The Federal Reserve doesn't focus on the same data you do. Their imaginary number of 2% is calculated totally differently than the headline CPI number that you see. We are going to land at a higher headline CPI number. I think we're going to land somewhere between 3 and 4%. There was a 50-year period, from 1957 to 2007, it was 4%. We ran a perfectly healthy economy. We are not going back to 1 to 2. We're not going to 2. We're going to live somewhere with 3 and 4, and candidly, one of the underlying drivers, 4 to 6% wage inflation in 2024 settles towards 4 to 5, but I don't think you get wage inflation below 3, 4 going beyond this. There's just too much underlying inflation that's impacting that employee that if you don't, you're going to lose them. Cost of capital. The good news is I think Jay Powell does not want to be Mr. Burns from 1972, a Fed chairman that elected a president. Therefore, he has to cut rates. You've got to get the economy in a position where the consumer is feeling better going into the election because the consumer is going to drive this outcome and they're not happy at the moment. I'm not here to pick blue or red. I'm not here to argue a position, but I don't think Jay Powell wants to go down in history as the second Fed chairman who elects a president, and so rates get cut. Where do I think we go? I think you need to get the Fed fund rate from 5.3 down to about 4.5. If you get in that range, the things that start happening, particularly around housing. So we're 4.5 million units short in supply. We have a total number that's 1.4. You look at long-term averages, you go, well, that's a pretty decent number. And then you get into the details. For 40 plus years, up until about 3 years ago, 40% of new housing built was for first-time buyers. We have priced the first-time buyer out of the market. We have priced the move-up market out. You're not moving. combination of you have a 3% mortgage and the house that you're buying is too expensive even before the cost of the mortgage. And we're only building about 10% of new housing is for first-time buyers. As employers, you should care about this a lot because it impacts the proximity at which your employees can live relative to their work. You have to get the multifamily housing market back in. It's just math. It's a corporate builder. You've got to get the borrowing rate down to a price where they can afford to borrow the money to build the property then that we reintroduce. We're down at a 200 to 300,000 multifamily. We're building 1.1 million to 1.2 million single family. You need the multifamily number to be 600,000 or bigger. You have to cut rates to drive this. And the fallacy in the Fed policy right now is the things that they think are influenced by an interest rate that lowers inflation that you and I see isn't true anymore. They can't influence some of the things. Rent is the single biggest item in the CPI. You cannot lower the price of that number or that value of that in the CPI calculation given the shortage of housing. You remember the Great Recession, we were at 2.2 million starts, it went down to 400,000. It didn't get back to over 1 million until 2015. The long-term average is 1.3 million to 1.5 million. So you have a 7-year period where you underbuilt. We have yet to make up that gap. Let's talk about solid waste. Price cost. This industry is not afraid of inflation, or you should not be afraid of inflation. Let me say it another way. I think you proved that you weren't afraid of inflation. You may not like inflation, but you're not afraid of it, therefore you can pass it through in price. We're coming into 2024 where we'll maintain that spread. So anybody who's dealing with the services side, they are going to price through inflation. Inflation for them is going to run at least at 4%. So whatever you're dealing with, you're getting at least a 4% average price increase. It could be as high as 7, in my opinion, of what you're going to see in the average. So the core price coming to the street could be 5 to 8, and then between rebates and rollbacks and the like, they'll be at 4 to 6. 4 to 7, sorry, is what you'll see, and they will continue to drive a positive price-cost spread, which means they'll drive margin expansion. Wages, I already mentioned that. I think we're going to be seeing numbers that are in the 4 to 6 range. In some parts of the country, you're starting at 6 and coming down. Others, the average is blending in at around 4. It's not less than that. So if you're hiring people who don't have anchors that keep them with you, families, homes, obligations, they're going to move for 50 cents an hour. Wage inflation is going to keep moving people around. It's better than it was. Open positions are down. You're down now into the 3.5%, 4% versus you're at 6 to 7. It is better, but it's still an environment where if an employee doesn't have some form of an anchor that holds them, they're going to move. And you got to keep wages at a level where you limit that plus training, good quality equipment, onboarding, the like. Capital spending, for years on the garbage side, it was 9.5 to 10.5 is what you said on an integrated company. And if you thought about that, 80% of that, 75, 80% of that was rolling stock and corporate overhead, including sort of your IT, things like that, and the rest was your post-collection piece. Walk those numbers up 200 basis points. That's predominantly about inflation. I don't think that changes. So we're living in, call it 11-ish, 11, 12 zone. And then the bigger companies, public and private, are spending on sustainability. That wraps in recycling as well as renewable natural gas. That walks those numbers up for a short period while they do that recapitalization or spend another 100, 200 basis points. So if you're selling equipment, they're spending. They have, if you're on the fleet side, they're going to spend a little harder to try and get caught up because they have been underperforming relative to their normal replacement cycle. We've been living at 70 to 80% of the normal replacement. What's normal replacement? 10% of your installed base. So if you have 1,000 trucks, they want to buy 100. They've been running below that. They'd like to catch up. You've aged the fleet. You've raised repair and maintenance cost, which they would like to get that back under control. It's an age of fleet issue. Recycling and RINs. I think on the private sector side, the business model has moved somewhere in the better than 70% of the business now is run like it's a manufacturing business, and therefore you're charging a fee that covers your cost of capital and generates a reasonable profit, and the commodity is part of this equation, but no longer the driver of the equation. My data would suggest that the public sector is further behind on that conversion, but we're making that conversion is happening. From a commodity standpoint, our observation is that the supply-demand imbalances that have existed around the market on a global basis, and these are influenced by global trends, are starting to reach equilibrium, and so the components in fiber, OCC, mixed waste paper, plastics, let's focus primarily on 1 and 2. You start having a conversation about 5, all cans, and glass. My opinion, please don't put glass in the recycling because there's not a value there. I don't want to get into an argument about it, but it's sand, blah, blah, blah. It's about weight for the politicians. But more importantly, those first categories are approaching a long-term average. We're close. We're not quite there, but we're close. And it appears that we're about to hit that long-term average somewhere in 24. And then if we don't mess around with this from a macro standpoint with policy issues or geopolitical situations, we should be in a relatively stable environment around the commodity for a while. And geopolitical could get in the way of that, particularly things that are going on in the Middle East, and then more is about logistics, the Panama Canal, it's sort of influencing the movement of goods, and does that change some of the economics? But overall, I think we're finding recycling's finding its long-term average again. RINs, if that matters to you from a renewable energy standpoint, remain volatile. They've swung between $3.25 all the way down to $2.70. They're back over $3. They're going to remain lumpy. The 3-year RVO helps, but somewhere in here, the financial services industry has to come up with a hedging strategy so that we can hedge this and reduce some of that volatility. Circular economy. I think this is an inevitability, but I would tell you that without content commitments, it's always going to be a bit of a struggle, and I'm sort of going to bounce back and forth and go, EPR's last. So EPR, people think EPR is going to be a solution to that. Not sure I know how to get that back. There we go. Circular economy, what I think is happening is you're seeing, and the next 3 slides sort of all come together about this, you're seeing a massive recapitalization of the MRF infrastructure, predominantly by the private sector. I would argue big garbage, and that's not just the 5 public companies, that's the largest 25, 30 companies in the country, sort of 250 million in revenues and bigger, are willing to put the capital in place to modernize the recycling infrastructure. And that speaks to this conversation about recapitalization. We think it's a multi-billion-dollar investment. We're somewhere halfway through that. What needed to happen? You started with about 800. You're now down at around 650. 2 things changed. 1, composition of the waste stream, and the improvement of secondary markets. More importantly, the demand for higher quality. And therefore, you had to modernize to assure that you delivered that quality. But more importantly, could you take out that middle expense that was happening because your quality wasn't quite good enough that it had to then go to a secondary processor to get it to a next level of quality to finally end up in a circular world. What's circular defined as? Like for like use. So nothing against the carpet world that we're using plastic, that's great that they've been, but like to like is truly circular, bottle to bottle, the sort of like to like. The paper world's been doing that for a long time. Extraordinarily mature and sophisticated markets. Plastics are not. Partly for the complexity of not all plastics are equal, the difference in chemistries and the complexity around that. But can we get to a place where you can get the level of recovery out of the waste stream so that you get a high enough supply and a high enough quality of recovery that you could go bottle to bottle? I think the answer to that is yes. If you want that to happen economically, repeatedly, my personal view, and this is where EPR comes in, I'm going to make a statement that might seem a little controversial. Don't do it. Don't support it. Now, the garbage industry doesn't care about EPR from a business standpoint. They get paid more. They'll make more money. It makes the process more expensive. But if your objective is you want a circular economy and you truly want reuse, you want content commitments. is what you really want. You want the consumer packaging world, if this is a conversation about plastics, which is predominantly what drives this conversation, 15% of the waste stream, about 15% by value is plastics. This conversation is driven about content commitments. Get everybody on an equal playing field. Not to put, if there are bottlers in here on point here, but if I assured them they were in a soundproof room, no attribution, and said, why aren't you willing to pay the premium for that recovered plastic versus the virgin? The answer would be, if I move first, the other guy doesn't, I'll lose market share. I would make a comment that in the fourth quarter earnings, go see this, you can pull it up on the system, PepsiCo lost market share. They raised prices predominantly in their salty snack business. The consumer walked away. To them, that's evidence of, I can't actually absorb a higher raw material cost, put it into the bottle, raise the price, and pass that through unless everybody has to do the same thing I'm doing. I'll lose market share. So they won't do it. Even if we could find 100% supply for them, they won't do it. That's my opinion because of that market share issue. Fourth quarter, they lost market share in salty snacks. It scares the heck out of them. So you need content commitments to create the level playing field that everybody has to do this, and therefore, and it will cost less. EPR will double the cost of recycling. It'll get passed to the consumer, basically through the backside of consumer products. You don't change the recovery rate. And you don't, unless you have content commitments, change the reuse rate. All you do is spend more money. Presidential elections. I've done this now for almost 40 years. I'd normally tell you they don't matter to what I do for a living broadly, specifically in covering the environmental services space. This one's different, and it's not about the persons, it's about red or blue. It's what, if red wins versus blue, what are there distinct differences? Yes, the answer is, as we think about what we do and the industries we service and we operate in, specifically, let's talk about energy versus climate. So the blue side, it's all about climate. The red side, if they get their act together, should argue about energy security. Change the narrative. There is going to be a long-term transition out of a carbon-based economy to approaching something that could be defined as net zero. One of the best pieces of independent research on this is the the public utility equivalent of ERAF, it's the EPRI. They wrote in September 2020, what are we in, 22, they put out a piece called Net Zero 2050. If you haven't read it, read the abstract. One, it will scare you a little bit, but two, it does the best analysis of, could you even do this? At its simplest level, just the permitting process is to put the infrastructure in, so you cannot get the infrastructure in time to meet the deadlines that are being set by, you will build all of these electric things that move us towards net zero. You just can't physically build the infrastructure. You can't get through the permitting. Just start there alone. There is never going to be a scenario where you don't have an ICE engine in some application in our lifetimes. As young as some of the people, and the youngest people in here, in your lifetime, you will never, ever, ever see it as zero. That doesn't mean we can't move towards a long-term plan, but it's not a all or nothing. There's a transition, and if the red side wins, they have to fight that from an energy security argument, not from a climate argument. If the blue side retains their position, they will amp up the positioning around climate. The evidence of that, we have a 1,000-year supply of natural gas in this country that's known. If you start looking at things that they think that they know are reserves, we could double that number. We have the lowest price of natural gas forever. We should make LNG. We should deliver it to other parts of the world that have energy shortage issues. It's a very clean carbon. Yes, I get it, but on a relative basis, it's very clean. And yet we shut down new development of LNG in this country solely politically, recently, as a perfect example. That's at a very high level, those are the things you would care about in the context of your business. I think from a geopolitical standpoint, yes, I think foreign policy would change. I do think that we would have a more substantive conversation about a national sort of immigration reform versus the political infighting that's about it right now. Although I think that the current red side misplayed what happened recently with the bill, but we need a national immigration policy. Capital moves freely around the world for money, data, and people everywhere else in the world, including our biggest trading partner in this Western Hemisphere, which is Canada. People, data, and money move freely around the world with regulation, except the United States. Data and money moves freely. People do not. We have a shortage of workers. We should figure this out. It's not a red or blue issue. We should come up with a plan on how we resolve how do you have a movement of labor as freely within a geographic zone in order to be able to meet the hiring needs of an economy. We don't have a policy around that. We should figure that out. And would a change of government come up with that? Balance of power matters. I realize this, well, maybe it's big enough. There have been some relatively substantive legislation passed when the chambers are controlled by one party. I think this election matters for that as well. Will you see for first time in a little while a change of the balance of power, and what will it bring? I think that is part of the decision calculus that will go into people as they walk into the privacy of that voting booth and think about that. Split governance not necessarily bad. It means that really, really super dumb things, either side, blue or red, don't get done in a split government, where when you highly concentrate it, you can end up with some bad outcomes, both sides. So that makes this year different than in many years past. Lastly, big trends. Gene mentioned PFAS. We have been writing that PFAS is an investable thesis from a Wall Street perspective for 5 years. This is this generation's version of PCBs. From what is the business opportunity to make money around remediation and equipment sales and the like. The bigger issue is that the regulatory environment around this is going to be draconian. We have a 4 parts per trillion drinking water threshold. It's the lowest in the world. Even the World Health Organization says that's too low, that they've put the number at 10 to 15 parts per trillion. The cost of capital to modernize the drinking water infrastructure in this country is going to be in the hundreds of billions. The annual recurring maintenance cost is going to be 10 to 20 billion. Big numbers. The federal government has underestimated this dramatically. The bill, or the rules are stuck at the moment at OMB. On a cynical level, they might not come out. I think the current administrator has other political aspirations in the state of North Carolina, and at this point has got everything that he needs for the environmental NGOs to support him. And whether the rules come out or not, they could be stuck in OMB for a while. But if they come out, they're going to get litigated. The bigger one is CERCLA. Superfund is the wrong place to put PFAS, in my opinion. It's being put there because I think EPA wants the stick that comes with CERCLA from an enforcement standpoint. The problem is the knock-on consequences. So every one of you in the recycling, the post-collection side of the business, you're a passive receiver. You don't generate this, but you're aggregating it in some form or fashion. And they come at you from a litigation standpoint, and do you for 1 second think that the environmental NGOs aren't going to go looking for pockets to go after as quasi-generators, and they'll tag composting, recycling, landfill, and the like, and CERCLA captures you in that unless you get intervention language from Congress. I think that if you want to manage this as a hazardous substance, this thing ought to belong in TSCA, the Toxic Substance Control Act, not in CERCLA. But more importantly, what I do think happens, watch the Chevron deference case. So I'm all over the map here. This is at Supreme Court. 40 years ago, the US Supreme Court ruled that if a piece of legislation did not have an absolute defined what you wanted us to do as a regulator, they let the agency that was overseeing it have the authority to interpret. That created a quadrupling plus growth of the agency side of the federal government. There is a case in front of the Supreme Court that could lead to, I think it likely is a 6-3 decision that you overturn what's known as the Chevron deference. Be fascinating to see if it will then subsequently lead to the unbundling of the agency side of the U.S. federal government and the shrinking of it. But more importantly, it will open a floodgate of potential litigation of things like if you get a circular ruling as a hazardous substance of PFAS. Quickly on just to get to the top three, I think alternative fuel vehicles, you should assume they're here to stay. The real question is, what's the power source? We're not of the opinion that batteries are a long-term solution. That's much more of an intermediate solution, and that the better and more impactful long-term solution will end up probably being fuel cell, unless Toyota really truly figures out how to lower the cost of solid-state batteries. Then I could see where a battery has a role. But lithium-ion, there's just way too many knock-on negatives. Let's start with fires, but the bigger one's just mining. It makes gold mining look clean in comparison. Landfill gas to energy. Landfill gas is basically the Swiss Army knife of renewable fuel. You can do almost anything with it. So hopefully the federal government will figure out that, and particularly IRS and EPA, that those are those options, that it is a Swiss Army knife of a renewable fuel, and allow for the development of any end use of it, and don't get in the way of it by limiting the tax credits, even though they weren't necessary. You know, the odd ruling around the ITC, the investment tax credit around renewable natural gas from landfill gas. You know, why? Why are you preventing this happening from a capital standpoint by your ruling? So hopefully everybody wakes up and sees that differently. And with that, I'll hand it off to, I guess, the next speaker.
Yes. Thank you, Michael. Just as you heard me say, he has a lot of different interests when he's not working, but can you believe all the things that he just talked about?